Hey guys, Zaman
and Christina
from
from
Our
Our
Rich
Rich
Journey.
Journey. In today's video, we are talking all about investing in foreign stock markets. So we are going to talk about the pros and cons of investing in these markets, and we're also going to go one step further, and we're going to talk about specific investments with Schwab, Fidelity, and with Vanguard that you can look into if you are interested in investing in these foreign markets. Because we love to talk about different investing options, but we also like to give specific examples so that you can do more research so that you can see if this is a good fit for your portfolio. So we're going to be giving you ticker symbols. We're going to be talking about specific historical performances with investments. We're going to be talking about what these specific investments invest in, and we're even going to be talking about their top holdings. So if you have any interest in investing in foreign markets, this video is for you.
But before we get to that, if you are new to our YouTube channel, do us a huge favor and subscribe right now. Make sure you hit that notification button because our channel is all about making, saving, and investing money for financial independence. Christina and I achieved financial independence and we retired before the age of 40. In fact, we live here in Portugal and we share our journey and the tips and things that we did in order to achieve financial independence. So if this is something you are interested in, please subscribe to our channel and don't forget to also follow us on Instagram. So before we go any further, let's define what we mean by investing in foreign markets. We are talking about buying stocks, bonds, mutual funds, index funds, ETFs, whatever the case may be, but these particular assets are in companies that are non-US companies. And we're talking about it from this perspective because we are Americans and we usually talk about investing in the US stock market. But for this video, we are talking about investing in companies that are non-US companies. And so these are the foreign types of investments that we are going to be talking about in this video.
So we have a lot to cover about foreign investing. So let's get started. And we're going to start off with the pros and cons of investing in these type of markets. So we'll start with the pros. Now, the very first pro is that when you're investing in foreign markets, you have global diversification. If you have global diversification, some of those things that impact the US uniquely may not impact the rest of your investments, especially if you're focused on global diversification.
The next pro with investing in foreign markets is it expands your opportunities. If you are solely invested in the US stock market, you may be missing out on other opportunities to invest in new technology, into growing economies, into emerging economies, places that may have more opportunity than you can find at home.
The next pro is that you may be able to find really good values abroad. And what I mean by this is if you are tapping into foreign markets that haven't really been tapped into by investors, you are getting your foot in the door before everyone else does. You're getting your foot in the door in a market that hasn't become oversaturated or overvalued by other investors.
And if you are one of the first to tap into an emerging market, you can see greater growth. This is a huge benefit when it comes to investing in foreign markets that are still developing. A lot of these smaller countries that have a smaller economy still have room to grow. And if you are one of the first people to be investing in those types of foreign markets, you may reap the benefits with greater returns.
So those are the pros of investing in foreign markets. Now, if you watch our channel, you know that we do invest in foreign markets, but we just highlighted the pros. We also want you to think critically about these type of investments and how they can work potentially in your portfolio. So we can't just leave it off with pros. We also have to talk about the cons. Now, the first con with investing in foreign markets is the risk. We already talked about the potential for great growth with emerging markets, for example. But any type of foreign market, there is risk in investing in the stock market, just like there's risk in investing in the US stock market. But we'll give you a specific example of the type of risk that you could have in your portfolio if you are investing in foreign markets, and it has to deal with Japan's market. So in 1989, the Japan Nikkei hit all-time highs, but after that, it subsequently went lower. And as of today, since 1989, the Japan Nikkei has not recovered. So if you were investing in 1989 in that particular index, your money has not reached that same high that it was in 1989 over 20 plus years later.
The next con is research limitations. Whenever you are making an investment in a company, you always want to be able to understand the financials of that company, how that company is performing, their profits, their losses, all of these things you want to be able to research. Well, there are limitations that you may encounter when you are researching foreign companies. One of them is transparency. So there are some companies, foreign companies, that don't have to report to the same standards that US companies have to report to. And this may be a challenge if you are accustomed to researching investments in a certain way.
And the next con has to do with the currency exchange rate. When you are investing in foreign companies, these foreign companies are generating capital based off of that local currency. Now, at some point as an investor, you are going to have to convert your investment into your currency. And depending on the exchange rate at the time, you can have significant losses.
And the last con is that emerging markets can be volatile and unpredictable for lots of the reasons that we talked about. But one thing that you must keep in mind is if you are investing in foreign markets, you are taking on more risk and more volatility. So this is something you should be prepared for.
So those are the pros and cons of investing in foreign markets, but we did want to highlight one particular comment that we think we may see in the comments below, and that is for those of you that are investing in large international US companies. So for example, if you invest in the S&P 500, a lot of these companies have international reach. And so a lot of people may feel that investing in something like the S&P 500 companies will give them that international exposure. This, we think, does give people international exposure, but not to the extent that you would if you invested solely in a foreign market. And this is because those S&P 500 companies, if you look back at the pros that we were talking about, those S&P 500 companies are already established. They're not considered emerging companies. Some of those companies may also be considered overvalued or oversaturated with investors. So there are a lot of pros that we talked about with investing in foreign companies that those S&P 500 companies cannot offer. So with that out there, like I said, Aman and I invest in foreign markets, but like we said, we always like to give you the pros and the cons so you can really decide whether these type of investments work for you. But in addition to that, we also like to give specific examples of different types of investments that you can research further to see if they might fit well in your portfolio. So we're gonna talk about specific investments with Fidelity, with Vanguard, and with Schwab, and we'll start with Fidelity. So let's start with the Fidelity Zero International Index Fund, FZILX. The expense ratio for this is 0%, meaning there is no cost to own this specific index fund. So it invests in foreign, developed, and emerging stock markets, investing in non-US large and mid-cap stocks. Their top 5 holdings are Tencent Holdings, which is a technology company, Alibaba, Taiwan Semiconductor, Samsung, and Nestle. So let's look at the performance. So year to date, its performance has been 5.27%. Its 1-year performance is 23.97%. And we are going to be looking at 10-year performances for all of these other investments that we're going to talk about. But this specific index fund was created in 2018, so there's actually no 10-year performance that we can report. So let's take a look at Fidelity's other index fund. It's called the Fidelity International Index Fund, FSPSX. The expense ratio for this is 0.35%. It tracks the total return of foreign stock markets based on the Morgan Stanley Capital International Europe, Australasia, Far East Index. The top 5 holdings are Nestle, ASML Holding, which is a manufacturer of chip-making equipment, Roche Holdings, which is a pharmaceutical company, LVMH, which is Moet, Hennessy, and Louis Vuitton, and Novartis AG, which is another pharmaceutical company. So let's look at the performance on this one. For year to date, the performance is 7.25%. Its 1 year performance is 25.11%, and its 10-year performance is 8.27%. So let's take a look at Vanguard now, and we'll start with the Vanguard FTSE Developed Markets ETF VEA. So the expense ratio on this is 0.05%, and it invests in large, mid, and small cap companies in Canada, Europe, and the Pacific region. The top 5 holdings are Samsung, Nestle, ASML Holding, Roche Holdings, and Toyota. And for performance year to date, it has performed at a 7.84% return. Its 1 year is 26.66%, and its 10-year performance is 8.70%. So next is the Vanguard Total International Stock ETF, which is VXUS. The expense ratio on this is 0.08%, and this one invests in small, mid, and large cap companies in developed and emerging non-US markets. The top 5 holdings are Taiwan Semiconductor Manufacturing, Tencent Holdings, Samsung, Nestle, and ASML Holdings. So looking at the performance, you see year to date, the performance has been a 6.06% return. Its 1 year performance is 24.33%, and its 10-year performance is 7.93%. And finally, we want to highlight one index fund with Schwab. It's called the Schwab International Index Fund, SWISX. The expense ratio on this is 0.06%, and this one invests in large non-US companies from countries with developed markets. The top 5 holdings are Nestle, ASML Holding, Roche Holdings, LVMH, and Novartis. And looking at performance, you can see year to date, the performance is 7.87%. Its 1 year performance is 25.04%, and its 10-year performance is 8.24%.
So those are 5 different examples of ways that you can invest in foreign markets, but there are a lot more other options that you can look into. There are index funds, ETFs, even individual stocks. The options are relatively endless. But we wanted to create this video just to give you food for thought, to think about other ways to expand and grow your portfolio. And maybe investing in a foreign market is something that you should consider. So if you've liked this video, please give it a thumbs up, subscribe to our channel, and join the journey.